Today, Asia-Pacific markets opened with a wave of optimism, following yet another record-setting session on Wall Street. Investors across the region are watching the global economic landscape with renewed confidence, but also with a sense of cautious calculation. As an international market analyst, here is what truly lies beneath the surface of today's market rally. The positive sentiment began in the United States, where major indices, led by the S&P 500 and the Nasdaq, closed at fresh all-time highs. Investors there are responding to strong corporate earnings, sustained consumer demand, and increasing expectations that the Federal Reserve may approach upcoming policy decisions with a more measured tone. This upward momentum quickly translated into early gains across Asia. In Japan, the Nikkei opened higher, supported by a weaker yen that continues to benefit exporters. Technology stocks, in particular, saw strong bids as investors position themselves ahead of expected improvements in global semiconductor demand. Despite lingering concerns about wage growth and inflation dynamics, Japan's market sentiment remains constructive. Meanwhile, South Korea's Kospi also traded in positive territory. The country's major chip makers and display manufacturers are seeing increased interest as global tech spending rebounds. Analysts note that South Korea continues to benefit from the structural shift toward AI infrastructure and advanced manufacturing. Still, geopolitical tensions on the Korean peninsula, as well as slowing domestic consumption, remain key variables that traders are monitoring closely. In Australia, the ASX gained ground as well. Mining and energy stocks performed strongly amid rising commodity prices. However, investors remain attentive to potential moves by the Reserve Bank of Australia, which continues to face the delicate task of balancing inflation control with economic stability. The real estate and financial sectors also saw modest gains, signaling broader market confidence. China's markets, however, painted a more mixed picture. Mainland markets showed hesitation as investors weighed domestic economic uncertainties, ranging from sluggish consumer demand to ongoing property sector pressures. Meanwhile, Hong Kong's Hang Seng Index traded slightly higher, supported by technology and financial stocks, although overall sentiment remains fragile. China's slow recovery and regulatory environment continue to shape investor attitudes, not only within the region but around the world. Across Southeast Asia, movements were modest but generally positive. Markets in Singapore, Malaysia, and Indonesia opened slightly higher, reflecting regional investors' cautious optimism. Many remain encouraged by global signals, but the strength of the US dollar and shifts in global capital flows continue to influence local positions. What ties these markets together today is a shared reaction to Wall Street's resilience. The US market remains the global barometer of economic sentiment, and when American indices rise to new heights, risk appetite increases across the global financial ecosystem. However, it is equally important to acknowledge the uncertainties that continue to shape the Asia-Pacific outlook. Global supply chain adjustments, energy transitions, fluctuating currency markets, and geopolitical risks, from U.S.-China relations to regional security issues, remain central themes for institutional traders and policymakers alike. In the coming weeks, all eyes will be on economic data releases, central bank communications, and the evolving narrative surrounding inflation and global trade dynamics. For now, the Asia-Pacific region is taking a cautiously optimistic step forward, supported by Wall Street's momentum, but still navigating the complex realities of a shifting global economic environment. This has been an international market analysis on the Asia-Pacific trading session, where cautious optimism meets strategic patience in a world of constant financial evolution.